Hi there. Before we get on with today's podcast episode, a quick note about our sponsor, PropTex. PropTex believe that they can increase user engagement on your real estate website by 40%. Sounds too good to be true. If you don't believe it, why not get in touch with them? Why not go to proptex.com? Why not send them an email, visit the guys on LinkedIn and challenge them to prove it? And obviously say that we sent you. And now on with the show. Hello and welcome to the PPW pod, bringing you news, views and interviews from the world of real estate marketplaces and PropTech. I'm joined for today's episode by Bryan Wester, talking to me all the way from the other side of the world. Bryan, how are you doing?
Well, thanks and you. Thanks for having me, Ed.
So I wanted to get you on because we're going to talk about Africa today. There's a specific kind of topic that's been in my head about Africa and a question that I've had about real estate portals in Africa for a long time. You are the right person to talk to about this. Why don't you quickly give people listening who maybe don't know you a rundown of your credentials, if you like?
I'll do my best. So I've been operating property portals in Africa for over a decade now, originally starting in Mozambique back in 2013, that later got some funding from FDV and I exited. Moved on over to Ringier, which was a Swiss multinational group operating all throughout Africa. Spent a few years with them, going from Kenya to Senegal to Nigeria, all over the place. And now, fortunately, I found myself in Mauritius for the past 5 years as the owner-operator of a small portal, Property Cloud, that is profitable.
Okay. Wow. So actually, so you've been running real estate portals for a decade. That makes me quite jealous because I think you and I are the same age, or actually maybe you're younger than me. Okay, I wanted to get you on to talk about Africa in general, but I'm also kind of curious about Mauritius. It's kind of a small market. Tell me a bit more about the Mauritius market. Is it just all expats?
Yeah, sure. I mean, Mauritius is often seen as a tiny market, but it's incredibly dynamic, especially for the real estate. Operating a small portal here has definitely shown us what's possible when the fundamentals actually align. I would say the idiosyncrasies of Mauritius, like you said, it's small but premium. So it kind of requires a concierge style experience. Trust is everything. We found that relationships drive deals more than automation. Such a small country with a population of only 1.3 million, and there's actually more tourists annually than residents. The expat population is still the vast minority, but is actually the main driver of FDI into real estate activities. Based on experience, there's a lot of positive government incentives geared to both foreign and domestic buyers. There's favorable tax regimes, no capital gains, purchase rebates, etc., etc. So a combination of that and the tourism plus lifestyle aspects translates it into a very strong second home market. And I would say, unlike some African markets, there are solid frameworks here, transparent regulations. Listings are relatively structured. Agencies are much more professional, and they do have a larger wallet size compared to the rest of Africa based on the price of transactions.
Okay, and so from your point of view, having worked in all of these other markets in Africa, obviously what you've just described there sounds a lot more attractive than some of those markets, but what was the kind of deal breaker to bring you to Mauritius?
I don't even think you need to ask that question. It's definitely the lifestyle.
Was it surfing?
I wish. We unfortunately protected by a beautiful reef around the entire country, which brings these turquoise waters, but no waves. No, strangely enough, throughout working in Africa, there was always holding companies in Mauritius that took me over there once or twice a year. I found the lifestyle to be very attractive, and there was still a lot of opportunity there. In terms of the competitive landscape, yeah, there's a couple portals, but nothing major. So it was a personal choice to make the jump at the beginning of 2020, just before COVID. So running a portal through that period was interesting.
Okay, and real estate portals in Mauritius, like how many are there? What's the competition? I think you mentioned before that you're profitable. Like, is it just a case of scraping by, or is it, because the market's quite big and because maybe the competition is not huge, you're actually doing quite well? Like, can you give me a sense of how the business is doing?
Yeah, sure. I mean, we focused on profitability from day one. Our approach was always profitability before scale, which I think is rare in this space. We didn't try to chase any vanity metrics. The objective was really simple, just break even. And thankfully, we achieved that in 2 years. So obviously, we were never venture backed, and it was money from our own pockets. So when you start spending your own money, you've got prudent capital allocation. So we grew through smart reinvestment, really focusing on sales, building client relationships, building real value for our users. And thankfully now our run rate's around 40% year on year, and we've got a nice 30% EBITDA margin.
All right.
So if I look back in hindsight, I would say the thesis as any portal operator is by providing more value, we can extract more revenue. So the value creation for customers is through innovative products that actually help their business. CRMs, automations, marketing avenues, AI tools, etc. Then you can extract more revenue as you deliver on that promise. So I would definitely say it's a give and take relationship.
Okay, and what's the team size? Like, how involved are you as the person leading this in day to day, relationship building, all the rest of it? Do you have quite a big
Yes.
team? Or...
No, quite the opposite, actually. I think this is definitely misconstrued in Africa with a lot of international investors or VCs coming in and spending lots of money with deep pockets. We have a very small team. There's only 12 of us, and recently that's grown. So we've always taken a lean as mean approach to the business, and it seems to have worked out so far. The market is small, and there are competitors. I mean, there's 3 property portals in Mauritius operating. And incumbent legacy business that actually expanded from print media into digital. Ourselves as the close number 2, rapidly growing and trying to overtake them, and a distant number 3. So fairly competitive, but not overly. And for us to try and grow sustainably, we had to keep a small team.
Okay, it's all sounding very nice, actually. But I want to move on because you kind of mentioned there what I want to talk about today, which is the kind of I'll say perception of real estate portals in Africa, specifically Sub-Saharan Africa, and how maybe over the years a lot of the kind of quote unquote demographic tailwinds, et cetera, kind of haven't translated into perhaps what some of the investors had thought in their theses and prospectuses. So you now working in Mauritius, this market where things work properly, and I imagine your average revenue per agent is fairly high. But you've also worked in these markets where perhaps there's been, maybe some of these demographic tailwinds and all the rest of it haven't worked out properly. What kind of juxtaposing your experience in Mauritius now and some of the kind of stresses in these other markets, where do you think, where's this disparity come from? Is it just a GDP issue, or is there, all these other things behind the scenes that we, who don't focus on Africa very often just aren't seeing?
That's a great question. I think having operated property portals across Africa for over 12 years now, I've seen firsthand some of these challenges that come with trying to build a sustainable classifieds business on the continent. I would say, firstly, big numbers don't equal big revenue. Yes, Africa has a young population and growing internet penetration, but that doesn't always translate into monetizable traffic. So there's actually misunderstood demographic tailwinds at play. We can take the example of Nigeria. Population 230 million, narrow that down to Lagos, population of around 16 million. Then narrow that down to the average monthly income, which is around $470 per month. And nearly 2/3 of Nigerians live on less than $2 a day. So that in itself shows the wallet size available and the biggest misunderstanding of Africa in general.
Okay, so let's take Nigeria as an example because it probably is the most prominent example of what we're talking about here. Quote unquote demographic tailwinds,
Mm.
but maybe not living up to the profitability or the revenue expectations. You've operated in Africa. What was the business model? And if you don't mind me asking, what were the kind of metrics? What was the ARPA like back then?
Sure. So I've had experience from Kenya to Mozambique, Senegal, and Nigeria. Nigeria was a very difficult operating environment, highly competitive with quite a few players just in the real estate space. In terms of traffic at the portal that I was working at, it was between 2 and 300,000 per month. So quite good. A couple thousand agents on the platform. But you're looking at an ARPA, if memory serves me correctly, of around $20 per agent per month. That's simply not sustainable.
And how many agents are we talking about? Because we've got a huge population, but I imagine a lot of it's informal. I imagine agents are only really involved in certain sectors and in kind of the higher end of the market. Would that be fair to say?
Yeah, there's definitely the informal market structure. I mean, so many property transactions, brokers operate offline, listings are unstructured, trust is a major issue. Portals struggle to get them on board with exclusive listings or even paid subscriptions. So you operate a freemium model. So that makes it very hard to create value. And from an operational view, there's a lot of resources that go into simply getting the listings online, which increases the OPEX. So you might have a couple thousand agents listed on your platform, but you only have 400, 500 paying you a month.
Okay. So again, we'll talk about Nigeria as a case study here. In researching this, there's a few kind of obvious examples of real estate marketplaces backed by foreign investors that have gone into the market and exited. So one that comes into my mind is like Jumia House, for example. So Jumia, big company. I think the founder was French or something. I was just reading today that they want to be operationally profitable by 2027. They've had all kinds of trials and tribulations. It's now an e-commerce business, essentially.
Mm-hmm.
But what is it that a company like Jumia in a country like Nigeria is kind of like getting wrong in its thesis? Like from my point of view, I'm thinking, well, these must be clever people. They must know what they're talking about. They must talk to people. Why is it that they've had all these problems? What is it something operational? Is it something to do with scale? Like from your point of view, having worked in these markets, what do you think they've got wrong historically?
Personally, I would say that the European or international model of operating classifieds in Africa just doesn't work. Top-heavy organizations burn cash. They come in with a rinse and repeat approach that worked in their markets, and they actually don't adapt to the local nuances with a lean and mean approach to cautiously build up first. So what that results in is a very high cash burn upfront, vanity metric growth, and when you come down to try converting your customers into paying subscribers, there's a huge churn rate there that's just not sustainable for the OPEX the company's going through.
Okay, you mentioned subscribers there. So if I'm getting this right, the model when you guys were operating in Nigeria was subscription. That seems to me like maybe an issue in itself, just having a subscription business model. I'm imagining that kind of cash flow for these agent customers is kind of difficult month on month. Is that the kind of way that portals have been doing it in Africa, in Sub-Saharan Africa, via subscription? And is it maybe a case of they need to look at just doing it per listing or trying to do something a bit more innovative, going transactional, or having a look at what they're doing in terms of business model?
Yeah, generally it was a freemium approach. When you launch, you just wanted to grow the content as fast as possible. Then you wanted to turn on the marketing spend, attract eyeballs to the site, and deliver leads to the users. The real tricky thing was trying to switch from the freemium to paid. So you ultimately always were operating a hybrid approach. Your paid subscriptions were a very, very low percentage of your overall customer base. So that in itself, combined with the small wallet size of these agents, just didn't quite add up in terms of the unit economics. You speaking about transactional models, My personal view is that I actually don't think that's viable in Africa, as if they were to be implemented, the portal would actually need to own the end-to-end capture of a lead to a conversion. In other words, become the agency. There cannot be any co-brokering with agents due to lack of trust and the huge informality of the markets. What does come to mind is, maybe an Infocasas Iris or a FuzzWaz model could work if you own the entire process in-house. But then you're operating as a hybrid agency and competing with the other agents. So you should know where you actually lie. If that was the path to pursue, my suggestion then would be to just focus purely on the primary market, partner directly with the real estate developers, and try get one aspect of the side right.
Okay, I've read something that you published, I think, on LinkedIn a few years ago about what people perhaps get wrong here. And you're talking about a city by city approach. What do we mean by this? Like, effectively just launching in city by city, or monetizing city by city? Or could you maybe explain what you mean by that, and maybe why some companies haven't done that?
Sure, happy to do that. I think that goes back to the misconstrued demographic tailwinds. Many people see Africa as one big lump sum of population with a huge opportunity at hand. What I was referencing as a city by city approach is you don't look at the total population or the GDP and say, this is how much money I can make as a portal. You would go to the capital city first and you would say, what's the population there? What is my customer base in terms of agents, developers, or car dealers, whatever it is? And then you would launch in that city first, extremely lightweight, and you'll try and build up a couple of hundred subscribers, get as many listings online. Once you've kind of got I would say, a solid core foundation or a core subscription base, then you can go outside of the city into the satellite areas. Operating in an African country is difficult in general. So starting in the main capital city, which is probably where the economic hub is anyway, just sounds like the most logical step for me.
Okay, we'll move on from the kind of non-success stories. There are, if you look, if you actually do the research, there are plenty of kind of smaller real estate portal operations doing pretty well for themselves in Africa. So I'm thinking of you guys. I'm thinking of like Ango Casa in Angola. Byron Kenya is doing pretty well in Kenya. Mark and the team Property Book are doing quite well in Zimbabwe. I mean, where I'm going with this is these companies, when you talk to them, they seem to be doing quite well. They're making a living. They've been around for quite a while. We don't really hear about them. What you hear about is the kind of investors coming in, getting cold feet, leaving, the non-success stories. Is it a question here of like people on the outside, people like myself reporting on it, just having it framed as it's not going well, versus actually a team such as like Property Cloud yourselves, a team of 12 people can actually make a market profitable and, make a living for the team and be absolutely fine, but we're not talking about it? Is it a question, are the success stories here not getting attention because of the scale?
That's very well framed, and I believe that to be true. I think people love the big, sexy stories of, huge market caps and big numbers and all of that. And there are some unsexy small businesses in Africa that are doing really well. I can't comment on Ango Casa as I don't know them very well, but Byron Kenya I have a past experience with, and I can definitely say that they have solidified themselves as the market leader. However, they have been subsidized quite heavily over the years, and I believe do continue to burn cash with international infusions. But there's actually an interesting anecdote to that story. And I hope it's not painting a negative picture of Africa. It's just painting a picture that it's hard. So originally, One Africa Media was a very large conglomerate. They raised tons of venture capital, expanded into Africa aggressively, and acquired Byron Kenya in the process. Then later on, Ringier acquired all of One Africa Media's assets, except private property in South Africa. And now Ringy is actually divesting from all African assets after burning through quite high levels of cash. And I mean, millions of USD year on year over multiple years. So this rhetoric is on repeat. One African Media, Ringy, Naspers, Seek, FDV, etc. These corporations and VCs come into Africa, unable to turn a profit, then leave. So what you mentioned of these smaller markets in unsexy countries still pursuing forward and making a nice business for themselves, to me, that's local knowledge, local entrepreneurship, trying to stay as lean as possible for as long as possible. Something that would be interesting for me to see is how the GG Horizontal, backed by Genesis Tech in Ukraine, who raised a lot of funding, how they play out with their lightweight Pan-African approach. So maybe to go back to the question of Byron, Kenya, they simply stuck it out the longest with a solid product offering, but are still venture funded. To answer your question about Property Book, which is the number 2 portal in Zimbabwe behind property.co.zw, now you have 2 profitable portals in a totally unique and closed-off environment. I mean, having seen the Zim economy with my own eyes, it's one of astonishment in how it continues to operate internally, yet cut off globally.
I remember hearing an anecdote about Mark, who runs Property Book, had a driver drive around and physically collect the cash from the people advertising on his property portal. It's just, I don't think that probably happens anywhere else, right? It's, there's some good anecdotes there.
Yeah, definitely so. I mean, specifically about Zim, the micro factors is that property is the only way to hedge against this quadruple digit inflation. So the market's very active in terms of transactions. And both those portals are founder led. I mean, Mark from Property Book and Garth Drummond from property.co.zw. So they also have stuck it out long enough to establish themselves as the authority and obviously deliver on the value of generating leads that translates to sales for agents who then in turn are willing to keep paying advertising fees that fuel that business model.
Okay, so I'm just kind of thinking, possibly quite stupidly here, could you not, as an investor, put money into some of these smaller businesses that are doing quite well already, unify them, and I don't know, kind of have them teach each other lessons, etc., and add value that way? Or because it seems to me when investors have come in, they've come in with a kind of one size fits all policy, and that's maybe why it hasn't worked. Is there a thesis that says, well, there's, I don't know, let's say there's 5 of these portals in Sub-Saharan Africa that are all doing, pretty well in their own little niche markets. They can probably learn from each other. We can probably make a little bit of money off the top. We should go in and invest. Does that make sense or not really?
Yes, I do believe that makes sense. It's almost a micro VC investment regionally. I think maybe in hindsight, 2020 is a beautiful thing. These large VCs and investors that came into Africa, African countries will gladly accept funds in. Try getting funds out of African countries and then come speak to me on another podcast. It's almost impossible. So Mark's story of carrying bags of cash just from customers is very relatable. These portals operating regionally, in Zimbabwe, us in Mauritius, call it Byron, Kenya, and Kenya. There's a lot of lessons that could be shared between each other. Realistically, everyone probably operates on a different tech stack. We've all tried to reinvent the wheel ourselves. We all have our own tech team, our own sales team, our own way of operating, and also the local nuances of the local markets. And that's where I think these big VCs got wrong. And in hindsight as well, I think fundamentally FDV's investment thesis was right. They found investors they found founders in very small satellite markets and invested in them. And the founders are the ones who had the passion, had the blood, sweat, equity, all of that stuff to build the business growing up. Obviously, geographically wise, things haven't really worked out well for them. And when founders exit a business or you become a complete operator, things do change, but that thesis definitely remains true. So in these smaller markets or micro markets, you want to say, of trying to consolidate a group, if you keep those entrepreneurial founder-led businesses going forward, I certainly think there's a positive upside there.
Okay, thinking a bit differently. So, again, I'm guilty of this, lumping Sub-Saharan Africa into one, neat little phrase there. You've also got South Africa, where I was told recently that the profit margins are absolutely through the roof, absolutely crazy. You are a South African yourself, right? What's the kind of what's the difference? Is it just purely demographic when we go look at South Africa and then go to, let's say, I'm going to use Nigeria again as an example. Is it just pure demographics, or is it something to do with the level of professionalism in the market? Like, what am I missing from the outside here that there's such a massive gap between these two markets?
Yeah, I would actually classify Africa into three market segments. South Africa is not Africa, that's isolated. Then you've got Africa, which stretches from Namibia, Zimbabwe, Mozambique, all the way up to the northern regions. And then you start getting into, Senegal, Morocco, Algeria, etc. The MENA, I would classify that as the third region. Each one operates completely differently. South Africa, much bigger wallet size in terms of estate agencies, professionalisms, frameworks, regulations, buyers, economy. It's amazing, actually, what those two portals, Property24 and Private Property, in South Africa have been able to charge. I think specifically Property24 has got an unbelievably complicated business model that somehow their agents understand, but it enables them to extract the most amount of value from the agents in the fairest way possible. And only on a very superficial level, it's operating on you buy kind of lead bundles that the portal knows how many leads they're going to generate you every single month, and you pay according to that, as well as your tier of agency, whether you're one of the top ones in the country or the smaller ones. So they've really got a very good commercial engine over there. When you step into Africa, and not just Nigeria, it's also a Mozambique or an Angola or Kenya, Tanzania. Again, wallet size is so small, not much frameworks, not much regulations. The portals are essentially coming in there to educate the market, build up these agencies, which requires a lot of investment and education. And essentially there's, understandably so, there's zero loyalty from an agency to a portal. It's, I'm paying you to deliver me leads. If you deliver me 200 leads and I don't get a conversion, I'm not going to pay you again. It's that simple.
Okay. You mentioned earlier that looking at business models and saying, okay, well, we need to go transactional might necessarily not be the way to do it in Sub-Saharan Africa for various reasons, right? So that's been the dialogue in the industry for a while now. We need to go transactional. Those of us who were in Bangkok recently for PropTech and Portal Watch, we heard from Malcolm Myers, who gave a presentation about what he calls the dominant advertising portal in each market, and talking about the conditions that a market needs to have for this dominant advertising portal to basically exist and be successful. That also doesn't seem, so the conditions that he outlined there are, I think, 6 of them. It doesn't seem that they exist in Sub-Saharan Africa. And it also, what you're saying is right, it also doesn't seem like you can pivot easily to a transactional model, which kind of leaves the question of, so if we're not going to be dominant advertising portals, and if we're not going to be transactional portals, where does that leave Africa? Does it just leave it, or the market, when we're talking about real estate markets, does it leave it just left behind doing its own thing? Does it increasingly become a case of actually what's going on in the rest of the world we don't pay attention to because it's not relevant? Do you see what I mean? Like, does the news and everything that we report on become less and less relevant now?
Sure, it's It's a very great question to put out there. And I think, yes, it can be misconstrued as counterintuitive that at these conferences, which I've attended quite a few and find them super valuable, the rest of the world is pursuing or accelerating in a different strategy with this transactions. First, it was ancillaries, now it's then it was iBuying, now it's transactions, right? Because you want to get a bigger share of that commission on the transaction. I think Africa is in a polite way, it's too simplified in how it's operating. That you try and bring in a model like this, you would need very deep pockets, a lot of education, and you would need to own that entire transaction end to end, because nobody else kind of knows how to do that. So a portal coming in with a freemium model or a pure play subscription model, it's the easiest for the market to understand. I'm going to pay you a $10 fee per month, $50 fee per month, and you're going to generate leads for me. Those leads are mine. If I do a sale, I keep all the commission. So it's kind of simplifying the approach that the market is ready to handle.
Okay. I'm going to turn into Simon Baker for a minute here. Simon always asks people on this podcast, what are the maybe 2 or 3 lessons you look back, you're 10 years operating real estate portals in Africa. What are the 2 or 3 lessons that you kind of learned that you would maybe give to somebody else doing the same thing or a similar thing?
Don't do it.
It's worked out pretty well for you, to be fair.
There's a reason my hair color is this, because it's to hide all the 12 years of grays made in Africa. Honestly, I would say stay lean and mean for as long as possible. Don't chase vanity metrics. Focus on break even before thinking of scale. Africa has taught me to be impatiently patient.
Okay. And so hang on, let me run through quickly the markets that you've worked in. So obviously Mauritius, there was Senegal, there's Kenya, there's Nigeria. Was there South Africa as well? Or did you never
Ironically, no.
Okay. But which of those was kind of the most challenging or the most fun or the most, I imagine there's a certain kind of honeymoon period where things grow quite nicely. Can you maybe talk about which one of those markets kind of showed the most, well, obviously Mauritius, but which one of those kind of showed the most potential and had you, had you believing all of those investor presentations for a while until you kind of hit the realities?
I would first start with most difficult, Mozambique. That was my first step into the portal industry in 2013.
What was the rationale behind going into a real estate portal in Mozambique?
That's an interesting story, Ed. I had family that moved there. I went to go visit them. They complained so much that it was impossible to find a house. I said there must be a website that can do this. There wasn't. So 2-3 months later, I built a very simple website using WordPress. Went to the market, signed up a few agents, got a few listings on board, and then got some advertisers, and a property portal was born by mistake. That was a very interesting learning curve there, because they don't speak English, highly Portuguese based, very difficult operating environment, but baptism by fire.
Okay, and what about the other markets? Was there ever a point where you were absolutely believing those prospectuses that talk about, demographic tailwinds and GDP growth and increasing numbers of people coming online, et cetera, et cetera? At what point did it all maybe sour for you?
Okay, I can take a step back first. I'd say my most enjoyable markets was definitely Kenya and Senegal. Kenya, just because of the amazing culture and people and population. There is definitely a sense of innovation within Kenyans in general. And in the capital city of Nairobi, it's a hustle and a bustle. Everyone is trying to improve their lives. They do adopt technology quite rapidly. They believe in it. And the teams that I worked with there were just absolutely amazing. So there we truly believed in terms of the growth rates and the potentials going forward. It just became a lot more difficult to monetize that.
Okay. Right. But I mean, did you ever believe in these prospectuses, or was it just a case of, no, you know what, those prospectuses, they clearly haven't been on the ground here? Like, what I'm trying to get at is, when does I imagine, so when you went to work for Ringier, I imagine you had, you'd read all these prospectuses that say, yes, this is going to be a huge growth market, and yes, within X amount of years there will be X number of people coming online, etc., etc. Or did you not believe all of that straight away because you'd had this experience already in Mozambique? Like, where were you as an operator aligned with what was written in a prospectus? Is what I'm trying to get at here.
Mm. I would say I was definitely a believer, because we were all looking at the same set of numbers, which in hindsight were wrong. We looked at market opportunity, market population, GDP per capita. And it was actually only since going to Mauritius and then seeing the vast differences and idiosyncrasies between how Mauritius operates, which comes from historic French influence and English influence, versus how Africa operates. And that's simply focusing on the wallet size. What is the wallet size of your advertiser that can pay you and is prepared to pay you for value? So that was a big thing. I mean, at the time, as an operator, my job was operations, commercials, product, etc. So you're always trying to create something to deliver to your customers that could help their business. Strong believers in that if we hit a certain threshold, we would break even, and then we would start making profits.
Okay. Yeah, good answer, to be fair. My final question is kind of a binary yes, no, but I will ask you to elaborate maybe a little bit. Do you think we will see another reasonably big investor come in and try and take over real estate portals in Africa? Or do you think that ship has sailed, and perhaps the kind of pace of innovation elsewhere is leaving Africa behind, and it's just made everything too unattractive?
Thinking of the answer, and it would be no. You would not see another large-scale investor in terms of a Naspers or a Seek size or a Ringier size coming in. Statistically, there have just been too many that have tried and not succeeded. I do like your thesis, though, that there could be a micro player that comes in and tries to consolidate the remaining portals or other verticals that are profitable, and make something of that. I can see an avenue of that happening.
All right. Is that your next bad idea that I've just given you there? Your new next 10 years of stress.
Yeah, I'm very happy in Mauritius. Thank you very much. I think I've got enough to deal with there, going from the close number 2 challenger to the number 1.
All right, Bryan, good luck with that. And thank you very much for talking to us. Hopefully that's been instructive for people like myself who don't know enough about these markets.
Thank you for your time, mate. Much appreciated.